Hey, everybody. It is Chuck Barone on Thursday, May the 16th, 2024. Again, I got no feed here on my computer. So, in the comments, just let me know if you guys can see me, can hear me clearly, because I'm working in the dark here again this today. It's YouTube having its issues, I guess. Anyway, before I get rolling in my complaining world today, I got a big show today, guys. Let me take a half a second. Welcome everybody to the show. Nice to see all my regulars chatting it up before we get everything started today. A very, very good day today for me. Oh, by the way, you guys know I've been suffering with this friggin' cold all week. Well, it just occurred to me, this might be COVID. So I took a test this morning. Guess what? It is COVID. Son of a gun, man. So I'm quarantined. I was supposed to go to the Sphere tonight to see the Grateful Dead or what's left of them. And I got to cancel that now. My wife gets to go, but I don't. And I get to miss my chance at checking out the Sphere this evening. This venue, world class. You guys might have seen some of the ads on it. Outrageous cool. Anyway, before I get started, let me take a half a second. Again, welcome everybody to the show. And thank you guys for your support. I can't tell you how much I appreciate the regulars who show up here every day, keep this show going. We're starting to get a little more consistent on our views. That really helps us. Can't tell you how much I appreciate it. All right, so let's talk about these crazy ass markets here today. So we knew we were going to get a lot of data today. We knew we were going to get the jobs. We knew we were going to get import prices. We were going to get some real estate information, builders, building permits, housing starts. We were going to get just all kind of data. That data kind of came in a little bit neutral. So the markets had kind of a weird day. The Dow was in record territory, briefly over 40,000 before falling, ending up down 38 points today, sitting at 39,869. The NASDAQ falls, I didn't even write how much it was down today, but finishing the day at 16,698. The S&P down 11, 5,297. So we had all three indexes broke records today. Not one of them could build on that yesterday. Not one of them could build on that today. Bond market also in reverse today. Yields rising. The 10-year up 2 basis points, 4.37%. The 2-year up 6 basis points, 4.79%. So it's kind of give back a little bit of what the gains were yesterday. I saw Walmart had big earnings. The dollar today rallies up after yesterday's disaster, up 29 basis points, 104.52. Decent number, but nowhere near. We were pushing toward 106. Now we're going to have to fight to get back above 105. I'm a strong dollar guy. I know a lot of people aren't, but I believe that a strong dollar is good for consumers, good for working people, who are what I advocate for endlessly. Stronger dollar, a little bit of a ding on gold and silver today. Gold falls $9.30. Still a great price, $2,376.70. Silver falls 19 cents. Still another great price, $29.54 for an ounce of silver. These numbers, as we get closer to these round numbers, $25 or $30 for silver, $2,500 for gold. We're going to get some resistance on these round numbers, as I've explained to you guys how charting kind of works. Round numbers tend to be resistance support numbers. Once it breaks through, it goes from being resistance now to support to bounce off of. We'll see where these end up, but I'm telling you guys, I really believe that gold and silver, the rally in these metals is just starting. Well, maybe not just starting, but is nowhere near the end. Oil rallies up today. It was down earlier. I was hoping it was going to move back toward our target, but rallies up today 67 cents. $79.30 for a barrel of West Texas Intermediate. Last I saw, Bitcoin down $944, 65,144 for Bitcoin. So still a good strong number, but looking at a little bit of resistance there, we'll see where it all finishes. Dead and Company, right? Yeah. So the Sphere tonight's crazy prices, man. $1,500 freaking dollars a ticket. Even the cheapest seats on the moon are $250, man. This Sphere is not playing around. But this was a show I thought would be worth the money. My wife loves the Dead, and they don't, they still don't have, Jerry, obviously, and a lot of the members have retired, but they got Bob Weir. They got John Mayer filling in for Jerry's parts. So we got a pretty good guitar player, decent singer. So there you go with the show tonight. All right. Anyway, so you know about markets today. Let's move on to data because there's a lot to talk about. First, let's just do the routine jobless claims. We were looking for that today. Came in at 222,000, slowing down 10,000 from last week's 232 number. They were expecting 221. At least it didn't come in at 212,000, which seems to be their favorite number. Not really much to say about this report. It's not bad. It's not great. It doesn't really show the job market, in my mind, being super strong. The continuing claims were up. But the good news is the shitty jobs that are being created, they're not laying off people as fast. All right, here's the reason for the headline today. This report came out from the New York Fed that they've really kept very quiet. I did not see this being reported on CNBC, didn't see it being reported on Bloomberg, was looking for it, didn't find it online. It's very strange that this important data was kept so quiet from everybody. But check it out, guys. Consumers, us, really now starting to fall behind on payments at the highest rate since the Great Recession back in 2008 to 2012. Listen to this, guys. Check out these numbers. Nearly 9% of the $1.12 trillion credit card debt, get this word they used, transitioned to delinquency status in the first quarter. So basically, 10% of credit card debt is now 30 days late. Even worse, 10% of those people who were late are seriously delinquent 90 days or more. And typically those people are not going to come back and make it up. They're going to blow that debt out, okay? That is over $100 billion of credit card debt that is now in delinquent status. Guys, people are using their credit cards for the necessaries. Now they can't even pay those bills. What does that tell you where we're going here, guys? If they max their card out, or they start missing payments and they cut that credit, or they stop the credit card where you can't use it, what's going to happen to people, man? If they're using that card to buy gasoline and food and the necessaries of life, then what, right? Now listen to this. It keeps getting better. 8% of the $1.6 trillion in auto loans. And you've heard me complaining about crazy-ass car payments averaging $700 with 15% of car payments over $1,000. 9% of the $1.6 trillion in auto loans also transitioned to delinquency status. That's another $130 billion in delinquent debt. So tell me this, guys. Just between credit cards and car payments right now, you have $200 $530 billion of consumer debt more than 30 days late. How much of that you think will ultimately get paid? People can't, these are necessaries, right? Paying your credit card, paying your car payment. This is routine stuff, right? Look at these. These are the numbers now, are the very worst numbers we've seen since the 2008 crisis. But at the same time, what are we seeing on TV? Great news. Woo, everything's great. The stock market's rallying, the stock market's rallying, the stock market. Look at this. Wow, everybody's getting rich. Baloney, man. The top 10% in this country own 90% of the stocks, guys. So the rest of us, the 90%, we get to collectively own 10%. So the stock market going up, it's good. It's nice for your retirement portfolios, right? It's nice for, you to look at your statements and see your retirement going up. But what the hell? This is not really great news to working people, like they want to portray it on TV at least. Now, people not being able to pay their bills, that is important news to working people, because it could be you next, man. We already know the vast majority of people in this country are living paycheck to paycheck. They're basically one missed paycheck away from massive financial difficulties. At the same time, the power in this country, the Federal Reserve, the stock market mavens, what are they all rooting for? Higher unemployment. This is nuts. Higher unemployment is only going to make all of this stuff seem 10 times worse. Because people lose their jobs, guess what? They're going to pay their rent before they pay their credit card, I would think, right? So this is absolutely catastrophic news. Now, here's something that's interesting. You guys have all seen this buy now, pay later schemes, right? Everywhere you go, it's being offered. That is $80 billion this year that doesn't go reported to credit bureaus like car payments and credit cards do. So we have no idea if the people making those buy now, pay later loans are actually paying them. But I'm guessing there's probably 10% of people, judging by the numbers we're seeing on credit cards and car payments, that aren't paying those loans already. So you're talking about $250 billion between cars, credit cards, buy now, pay later deals that are delinquent. And this number, if the powers that be have their way, is only going to get worse. This is madness, guys. They want to go ahead and tell us that unemployment needs, they're cheering for these rate cuts, right? So they want unemployment to go higher so they can cut rates faster. Okay, let me ask you this, guys. You guys are intelligent people. If they cut rates a half a point and your credit card goes from 25 to 24, that going to make a difference in your life? No, probably not. You're going to refinance your car to save a half a point? Probably not. So that cut is not going to make a difference at all in the day-to-day lives of us, working people, the schmuckatellis. Now, when you're borrowing Brazilians of dollars to run your businesses, you're a multinational, you're a U.S. Treasury, well, that half a point means a lot when you're borrowing the money on the scale they do. So it's now turning into us versus them, man. This is a disaster in the making. And the bad news is they're not going to lose, guys. We are. Now it looks like by rooting for unemployment and openly rooting for it, all they're asking for is a giant ass banking crisis. They're already on their way. Regional banks are already toast. All the banks in the country are holding tons of shit debt. Bonds that are way underwater. Well, now they're going to make it 100 times worse. with credit card delinquencies, with auto loan delinquencies, and everything going underwater. It's madness. Quick stuff today. I'm already been rambling here for a while. Listen to this. Ben Bernanke, Helicopter Ben, our illustrious former chairman of the Federal Reserve, the king of this inflation, who once said, if there was a recession or even a situation like the Great Depression, he would throw money from helicopters to get more money in circulation. This is the kind of genius thinking these people, they're so detached from reality of working people. Bernanke calls for higher unemployment in the United States to help bring down inflation. Okay, so if inflation goes from 3.5%, where it is now, to 2%, and you lost your job to help bring that about, are you benefiting? If unemployment goes from where it is right now up to 6 or 7, the country going to benefit from that? This is freaking madness, guys. Nothing makes sense. Jamie Dimon, Ray Dalio, two of the brightest minds on Wall Street, both today coming out warning about U.S. debt, warning the U.S. debt is unsustainable, warning. Dimon put it best. He said, it's better for the government to do their job than for the market to do their job for them. There's wisdom, guys, because if these knuckleheads continue on this path they're on, and the market just turns against treasuries, it is going to be the ugliest situation in financial history here in the United States, because we can't function without this debt. It's nuts. It's madness. Import prices. Another piece of data we got today. Import prices coming in up 0.9% from last month. A huge jump. They were expecting 0.2. So they only missed by 4 or 5 times. Just nuts. So import prices, guess what, guys? Most of the stuff we're buying is imported from somewhere. Even our own companies are importing back into our country because they want to take advantage of that cheap labor to pad their bottom line. So now import prices going up. Multinationals will benefit. Of course, the consumer, us, going to get screwed. More bad news on real estate. Both building permits and housing starts down. Builder confidence down. Now that's all about high rates, and I get that. Builders talking about having to resort back to incentives, having to resort to, buy downs of mortgage rates, which is expensive. To sell the houses they're building, of course, they're slowing that down. We already have a shortage of housing in this country that's leading to these gigantic increases in rent and mortgages. And of course, the corporate raiders in the middle of it all, making a big mess of it. So we got this now. Analysts come out today and basically say that Powell's big mouth is what made everything stop as far as bringing inflation down. But Powell's saying the words, the next move by the Fed will likely not be a rate hike. The market interpreted that as rate hikes are off the table. Looser monetary policy. The market already starts putting that in before the Fed even announces it. So Powell, our friend St. Jerome, making a mess of things by talking too much. Guys, I wish I could say there was something positive to talk about today. There really isn't. This consumer stuff, I've been telling you guys, don't take on new debt. If you have debt, pay it down. Even if it's $5 or $10 extra on your credit card, it makes a difference, man. This is the trap they've set. And you can see now about 10% of the consumer population caught in this trap. $250 billion at risk. It's a disaster, guys. This tells me, we can pretty much now say for sure the recession's coming. And the condition the consumer is going to be in going into this recession is going to probably be as bad as it was in 2008. And the recession itself will probably, in my estimation, be as bad as the recession in 2008 was. Anyway, that's it for the day, guys. I'm already at almost 20 minutes. We'll be back tomorrow to wrap up this crazy week. We'll see what the hell tomorrow brings. Hopefully, we'll find a glimmer of something good somewhere tomorrow. Again, before I go, I just want to thank you guys for your support. As always, please hit the like button, guys. It really makes a big difference. It helps get our video out there in front of more faces. I will be on the comments today, so if you got anything to add, questions, I haven't been able to read a lot of this as it's coming through on the live chat today. Hit me up in comments. I'll be responding. In the meantime, guys, go out there and have a great evening. Grateful Dead night in Vegas. And I'll be back tomorrow to bring you guys the news you need. Until then, everybody, take care. Thanks.